You hate talking about Bitcoin and energy.
I do.
Why?
I just feel like you have two sides. They have their opinions. They're very entrenched opinions. Neither side are going to change. And because of that, it becomes just very heated and emotional very, very quickly.
That sounds like good content.
It's like watching a presidential debate. Like maybe there's going to be some zingers or like some viral moments, but it doesn't feel like we're actually discussing anything.
So you think nobody changes their mind?
I don't think so.
Okay, well, we're not going to try to necessarily change anyone's mind today.
Okay.
But we want to give everyone all the information that they need to sort of understand Bitcoin and energy. Bitcoin uses a lot of energy. Experts say crypto uses more power each year than Argentina. The energy it takes to process one single Bitcoin transaction could power the typical American home for more than 50 days. Bitcoin is so energy intensive because it relies on miners, high-powered computers that process transactions. These attempt to solve really complex problems and then get rewarded in the form of Bitcoin when they succeed. And more computers are trying to do this. The amount of computing power needed to process transactions hit a record earlier this year. Miners are trying to lower their carbon footprint by using renewables, but the share of renewables used to power Bitcoin's network actually fell between 2020 and 2021. All of this is happening at a time when the world is seeing one of its worst energy crises in decades. And it raises quite a few big questions. Is there an eco-friendly way to power crypto? And perhaps even more importantly, should energy even be going to crypto while the world struggles to keep the lights on? Alex, it's good to see you. Thanks for joining us. So it's not really in dispute that crypto uses a lot of energy, that Bitcoin uses a lot of energy. I think that the argument is that it's not worth it to use a finite resource for something like cryptocurrency. But what would you say to somebody who says, no, I believe in the promise of crypto, and it is worth it for us to actually spend a finite resource like energy, mining it and on maintaining it?
I would indeed agree that if any amount of energy is being spent, you always have to look at what do you ultimately get back from that. And the thing is, when we look at the Bitcoin network, we know that it is a digital currency, a payment system, and we also know that it is a payment system that is currently handling about 100 million transactions a year. So that means that it's actually not handling more than a handful of transactions per second, and that's it, which is completely negligible if you look at it from a regular world of finance perspective, because the traditional financial institutions are responsible for handling more than 700 billion digital payments every year, and that amount is still growing.
So, that's an amazing stat, but to be totally honest, part of the reason I don't like having conversations about energy is because, and Bitcoin and crypto's energy uses, is because on both sides, it sort of devolves into a toxic conversation is what I've found. And I've found that there's a lot of bad faith arguments on both sides. And I know that you're deeply rooted in the numbers, in the actual facts, but what's your best sense about why people get so emotional over these numbers?
Well, it's not that hard to see why that is the case. We see that a lot of people have invested their money in Bitcoin, and we see that this type of data reflects extremely poorly on Bitcoin, and actually to the extent where we see that China took action to completely ban cryptocurrency mining from their country in the spring of 2021. The European Union almost banned Bitcoin trading in the EU a few months ago, and actually the White House just released a report that also recommended consider potentially eliminating cryptocurrency mining. So of course, with a lot of people having invested in this, they definitely won't like this whole discussion, and certainly not if that's going to result in outright bans.
It's hard to have a conversation about energy and crypto's use of energy without talking about the Ethereum Merge. Of course, the transition from that blockchain from proof of work to proof of stake, which of course is much less energy intensive. Could that be the green solution for the industry broadly, beyond just Ethereum?
Well, I think so. I mean, if you run on proof of stake, or well, I must say it's not the only alternative to the process that is responsible for so much energy consumption in Bitcoin, but it is definitely the most popular alternative. In any case, let me just say, if you make use of proof of stake, you can probably get away with using something like 10,000 times less power than you would need if you were to run on proof of work. So just changing that part of the software can lead to incredible energy savings, and we see that there are many cryptocurrencies already available in the market that are running on proof of stake and have been running on proof of stake for years. So if you do that, and if that becomes the standard for the industry, then a big part, or well, almost the entirety of the energy consumption we're talking about could be solved.
Alex de Vries, thank you so much for joining us.
Very welcome. If I can say one thing, is we talked about proof of stake, but we didn't really bother to explain anything. We just mentioned that it could save a lot of energy. Is that something you might want to spend a few extra words on, like why is it even possible to save so much energy if you do that? But it's a bit of a lengthy explanation and maybe too technical, but yeah.
Can it be in 30 seconds, do you think? Like in a way that's digestible for normal people?
In 30 seconds, well, digestible maybe. 30 seconds,
okay.
Challenging.
Challenging, eh? Well, when you have it scripted by a Bloomberg journalist and thrown in a teleprompter, it's actually pretty easy. So in under 30 seconds, here's the difference. In proof of work, super powerful computers owned by miners compete to be the first to unlock a cryptographic puzzle. After multiple attempts using up lots of energy, one miner solves the puzzle. If they're first, they get a token and a transaction is recorded. Proof of stake dispenses with the problem solving, removing excessive energy use. Instead, transactions are approved by participants who put up coins as guarantees of their work, and if that work is validated, you get a reward. If it isn't, you don't. See? Wasn't so hard.
Zach Bradford, CEO and president of CleanSpark, with us now in studio. What's interesting about CleanSpark is it sounds a little bit like an oxymoron, a sustainable Bitcoin mining operation. What does that actually mean in practice? How do you fulfill that sustainable checkmark?
Our focus on sustainability really comes down to, both sustainable energy, but also sustainable business practices and how we interact with the community. So for us, energy is a big deal around Bitcoin. We approach it with the acknowledgement that energy is a feature and not a flaw. And, we focus on sustainably interacting with the grid, but also we use about 90% carbon-free power with a goal of ultimately getting to 100% at some point in the future. But it takes time. We think that being part of the transition is what matters, getting from point A to point B and in a sustainable process.
What is carbon-free power?
So carbon-free power can come in many forms. It can be solar, it can be wind. We actually use a lot of nuclear energy, which puts off no carbon into the atmosphere. So those are kind of the cornerstone of the energy sources that we use.
Do you also tell us about the role of carbon offsets? Because I know that there are a lot of miners who do use carbon offsets. How much of that is part of your business model?
Very little. So again, we focus on the source. So we're only using about 10% of the power has any sort of carbon output right now. It can be a strategy, right? But not all renewable energy credits or carbon offsets are created equal, right? So anything that we do, we try and go through a mechanism that results in new solar generation being added to the grid. So that's the only one that we participate in right now.
Do you buy power that is carbon-free, or are you actually generating it yourself?
We are buying power. So
you don't have your own solar arrays or anything?
Not right now, we don't. We are adding a solar array to one of our facilities in the near future, but it'll still just be part of what it is. So we connect directly to the grid in the areas we operate in.
I want to get existential.
Okay.
A question that I have about the Bitcoin mining industry, because there's a lot of pressure on the entire industry.
Yeah.
right now. And then you layer on the need or the push to become sustainable. It feels like it's fallen way down the priority list because there's a lot of miners who are just trying to stay in business right now. And in this path to a sustainable, a green Bitcoin mining future, how much has that timeline been pushed out?
I think it's actually been shortened in some ways because it's actually getting more important. Some of the conversations are actually leading to quicker change. So, depending on how you poll the industry, but it's estimated that about 60% of the power used by the industry is already renewable or carbon-free. Now, that still leaves a big gap to close, but if you were to compare it to any other industry, we're actually doing a lot better in most cases.
What would you say to someone who says, okay, electricity is still a finite resource, even if we're getting it from renewable sources, and they just don't think it's a good use of energy to be mining crypto? They would rather that energy be used for keeping the lights on or running air conditioning in hot places.
I would say, look at the regions that miners are operating in. Miners focus on finding cheap power. It's part of our strategy, right? And we operate a lot in Georgia, where there's actually abundant power. So would I say it would be a good use to come into California, which has a very, the grid is unstable and under a lot of stress, and open up a Bitcoin mine? Probably not. But ultimately, if you do it in Georgia or a few other places like that where there is abundant energy, we're actually focusing on using the underutilized resources that do exist and then adding to the generation. So again, you have to think of it as a transition about what we can add.
I have a series of simple questions,
Yeah.
if we can go there. Let's talk about the Ethereum Merge. The switch from proof of work to proof of stake. We've all seen the headlines that it cuts Ethereum's power usage down by 99% or something. Why can't Bitcoin just go to proof of stake?
Yeah.
It seems like a pretty easy solution.
Well, I would point to, again, proof of work is, and the energy it uses is a feature and not a flaw. Again, proof of work. What is Bitcoin? There is no CEO of Bitcoin. It's fully decentralized. And really, proof of work is really the only good way to truly secure a blockchain without an overseer. And that has value because Bitcoin is used worldwide as a currency without, somebody changing the mechanism. What creates that value is ultimately there's only going to be 21 million Bitcoin ever. So somebody can't just decide tomorrow, hey, there's going to be 40 million. It's kind of like, we're all experiencing what the Fed's doing right now to kind of pull back from inflationary, money printing. That won't happen in Bitcoin.
But that reminds me of another simple question I have. 21 million Bitcoin will ever only be mined. We're at 19 million now, I believe.
Yes.
What happens to the miners when we get to 21 million?
They will essentially live off of very small fees. So think of Visa, MasterCard, Amex. These are all companies that are very large and function very well on actually very small incremental fees. That's what will happen. But, that doesn't happen until 2140. So every 4 years, there's a halving. So basically the reward right now gets cut in half every 4 years. So even though you say, oh, there's only 2 million left, how do we get to where it's 120 years before the reward runs out? By that time, the expectation is that Bitcoin essentially truly functions as a worldwide currency, and the small fractional transaction fees can support all miners.
So you haven't started planning for that yet?
We have not started planning for 2140.
Okay.
2140 or
2140.
Oh,
so 120 years from now.
We're still talking about Bitcoin in 120
Yeah,
years.
exactly.
I think
we'll
we're all
all
gonna
be in the metaverse.
Yeah,
so it'll be fine.
Which is,
to be
and
alive
everybody
then.
will be using Bitcoin there.
Yeah.
So
If we think about crypto mining compared to mining of natural resources, a lot of the competitive advantage has to do with location. So, De Beers has great access to diamonds, and Rio Tinto, perhaps in the US, has great access to copper. Whether or not they can get it is a different story. What's the competitive advantage for a Bitcoin miner, for your company?
yeah, and it is partially location, right? So for example, we have 4 facilities in Georgia. And the reason we chose
These are the ones you guys recently bought.
Yeah, we've had, we've been operating in Georgia since 2020. We recently did buy 2 more. And these areas where we're at is we're kind of on grid edge areas where there's actually excess infrastructure, excess energy that's not being used, and because it used to be a factory or something like that. So yes, it allows us to get good rates on power, but we're also bringing back to communities, workforces. Factories that used to be there are closed. So we have a workforce that's ready to go, we have energy that's ready to go, and lower rates.
But couldn't any miner do that?
Yes, absolutely.
And to the point that you recently made a few acquisitions, when you broaden out and look at the broader industry, in this moment where we've gone through a big downturn, would you expect more consolidation between some of these miners?
Absolutely. For us, we saw it as a big opportunity, but you had to have a healthy balance sheet. You had to not be over leveraged. You had to be ready for this, downturn. It's something that we've been preparing for a long time. And so the miners, and we're not the only one, the miners that have prepared, there's definitely going to be some consolidation in the space.
Can you explain, because Katie and I have talked about this a lot, and I don't know if anyone really has been able to answer this for us. When we think about mining, if we take it back to like pulling natural resources out of the ground, that's clear to understand how somebody gets gold or oil or copper out of the ground. Bitcoin miners don't just find new Bitcoin. They also help keep the Bitcoin network running.
Yes.
Can you explain the difference between like discovering new Bitcoin versus maintenance on the network?
Yeah. So really what we're doing all the time is we're processing data. So we have tens of thousands of computers processing data. And what that data ultimately is it's locked by a cryptographic key. And that's what our machines are trying to guess. And so they're putting in all this effort to do that. But ultimately, when you get a block, so what is the block? The block is the ledger of all the transactions that got recorded. So if you sent Bitcoin to your brother or whatever it may be, right? That ledger has to then be compared to all the ledgers before it. And so all of this work is going in to make sure that it's secure and that block doesn't get placed without verifying everything behind it. And if there's an error, then the block doesn't get placed. You also don't get the reward.
Do you actually need to be on the grid? Like, couldn't you find a spot in the Mojave Desert that during the day it's hot and it's sunny and it provides solar power? And then at night it's windy, so you can get wind power. So you could, in a perfect world, be running 24/7. Couldn't you just be self-sustained?
Absolutely, you could. But I would also argue that then you're providing your own benefit with that energy, right? I think that there's true, and this is how we've always set up the company, there's true ancillary benefits to the grid that provide value. We actually operated out of California for the first 6 years of our business, not as a cryptocurrency mining company, but as a renewable energy company. That's how we got into the space. And what we found is the interaction with the grid was incredibly important. So we had software that would do that. And at scale, though, you start to run into these interesting issues to where renewables going onto the grid at the wrong times of the day is actually causing a problem for California. There's too much power hitting the grid. The sun is shining and everybody's at work, and they're not using all their power at their home. Then they go home at night, the sun goes down, they turn their TV on, they turn their AC on.
Mine some Bitcoin.
Yeah, whatever they may be doing, and now there's not enough energy at that moment. So it was about balancing the time the energy is available and not available. And so, really interacting with the grid, we see as important, because if we do a behind the grid project, or behind the meter project, where we're self-generating wind and solar, yes, it means that we're only using renewables and we're not impacting the grid, but it means we're not helping the grid. So it's definitely one way to do it. But it's not the way that we've approached it, because we want to drive change at the entire grid level. We really think that our sustainable strategy should provide a benefit to everyone around us.
So convince me, who, for the sake of argument, just a total crypto skeptic, that we shouldn't be spending any energy on cryptocurrency, that it should all go toward, actually essential things that we need power for. Like this light board behind me that probably doesn't use much energy because it's LED, but you get the idea.
Yeah, I would point to the fact that that energy that we're using is generally already available, but no one's using it. And so you think of I'm going to point to, one of the communities we operate in, okay? They have a goal to transition off of coal, and they're in the process of doing so.
Where's this?
This is in Georgia.
Okay.
It's actually in College Park. It is the same city that serves the Jackson Hartsfield Airport. We operate there. And we are working with them to help them transition away from any reliance, right? And this has been a multi-year strategy for them. It's not that there isn't enough power, and I think that that's a mindset that we can change. Is power is abundant, it's around us. It's about how it's harnessed, and if we're there to pay for it all the time, we can help support grid infrastructure, which in this country, we need to invest a lot in grid infrastructure.
But why do you have to be mining Bitcoin to do that? I guess what I'm still not hearing is like the argument about the argument, and this is the argument that totally bothers you, I think, of like why Bitcoin should exist.
Well, let me ask, what else is it going to be used for? And how, so I'm going to put myself as the utility now, right? When, in Georgia, it's been a hot summer. When the power prices are peaking, that also means demand is peaking. We shut off. All that power goes back into the community. We can actually help reduce power rates in communities because being a large buyer, if it's not being purchased when, it's off peak, then that means that they have to take those dollars and they have to put them back into the community somewhere, right? And so we're actually able to do all of those things. So we're really providing a grid service in addition to everything else. So the question is, why Bitcoin? I would say, point to another asset or another business that's willing to do that. Come on the grid, off the grid, and really interact in a way that balances both the grid and the power itself, but also balances the monetary system behind utilities. And you can't find one. If you're a regular data center right now, which is a whole other conversation, but you have to be there all the time. You can't just shut down because there goes somebody's website, right? Or there goes somebody's backup system. Something that we're not talking about, just pointing to data centers is, why data centers? Why is it okay to, host hundreds of megawatts of selfies of power all the time, 24/7, and set up in a system that cannot interact with the grid?
We got a tweet.
Yeah,
So.
I know. The people need my content. So.
True.
Yeah,
Yeah.
thank you. Tim, I think I made it pretty clear that I did not want to talk about energy.
You really did not want to do that episode.
I actually got a lot out of it, though.
Good, that's the idea.
So much so that I believe we're going to do a whole nother episode on it.
All right, let's do it.
Okay.